What is going on, Future Focus family? My name is George. I talk about investing on this channel, and today we're gonna go through something I've been getting asked a lot of questions about. So I've been getting asked, is this the time to invest in anything? Should we be investing in stocks? Should we be investing in crypto? Should we be investing in housing? It's the question to answer you is not that simple to answer, but what we're gonna do is take a look at a few things and try to help us analyze and see if this is in fact a good buying opportunity. Now, before we get into that, uh, a lot of it depends on your time horizon. How long do you plan to be investing? If you plan to be investing for the next 5 years, then yes, this might be a great time to buy. However, if you're going to be investing for 1 year, the next 6 months, do you really want to jeopardize your money and put it into something that you may not be able to pull it out of? One of the things we could talk about first is housing. So housing right now, since December, the APR average has gone up about 2 points, so 2%. So back in December when I refinanced, it was about 2.25 that I refinanced one of the houses for, and now currently you're paying over 4% for the same thing, and it doesn't have to change now. The housing prices usually take about 6 months to reflect. So if I were to buy a house right now, it would literally be one of the worst times because not only is the APR going up, the prices of the house have not yet started to decline. The reason they have not started to decline yet is that homes have not been built at the same fashion. So the amount of homes that are available are still on a decline. They're still very limited. So people are willing to pay up for those houses. In the stock market, we have kind of something different. A lot of money has come out of the stock market and cryptocurrency. This chart right here will show you what the NASDAQ has done. The NASDAQ has come down. You could see right here where it was, where it's going. It's not looking too good there. If we take a look here, we could see what a lot of the stocks that we talk about on this channel, they have been doing. Let's take a look at, let's see, Clover Health. This was one of the ones that was uh, a SPAC, a special purpose acquisition company from uh, Kamath Halapalatia. I screwed his name wrong. I always do. But it's down over 90%. If this is a company that you wanted to invest in, it's more on sale now than it will probably ever be. So, yes, I would jump on Clove if I was already looking for it, or maybe I bought it higher and I'm wanting to like average down. This would be a great time to do that. You have skills. A lot of people thought, this is the next gaming company in line there with a company sort of like DraftKings. This is a kind of company that I want to get in. So people are going to jump in there. You have another one like Robinhood. A lot of the retail investors were really optimistic about Robinhood when it first came out, and they were all about it. They were all, you know, jumping on it. Then you have the Real Beyond Meat is up there 70%. PayPal, which is actually a huge company, came down about 69%. You have Palantir, which is another one we talked about on this channel. That was really great. And that one has equally come down. So, one of the things that we need to discuss as well is the Federal Reserve. So the Federal Reserve, they increased the rate by 0.25%. So let's look at this. We obviously were in a correction. So what has the market done in a correction? So we could go back here all the way to 2007 and see that after a correction, what happened? 1 week later, it was up to 3.9%. 2 weeks after that, 4.1%. We could go down here to 2009. This is the era of the financial crisis. There was a few corrections in that period. What is a correction? Anytime any asset, it doesn't matter if it's a house, it doesn't matter if it's cryptocurrency, it doesn't matter if it's a stock. If it goes down to 10%, you are in a correction. So we can look at history and see what has happened after a correction. But in the most 2008, after the financial crisis, 1 year after any correction, the market has been up. And if you look, it hasn't just been up, it's been up a lot. We could take a look here 33.5%, 37.1%. There was a few years where it was up 59, 59. And a lot of it could depend on how much it came down. So years where we had a kind of a delay, you would see that it bounced back almost at the highest of the mean, so 54% over here. So that's one thing you should look at. Another thing I wanted to share with you guys was the first rate hike. So we got a rate hike from Jerome Powell, the Federal Reserve. We got that rate hike this week. But I wanted to show you what have stocks done generally in the S&P 500 here. What has it done in the next 3 months after a rate hike? So on average, the market has been up about 0.7%, and it's been positive 50% of the time. So it's been positive. That means it's been up, but it hasn't been up that much. So basically, what you can see is the market going up and down. Historically, the Fed has not announced that we're going to raise it 6 more times. So that's another thing you have to consider there. Even though the market has acted very bullish, what has happened, one of the things you need to consider is what is going to happen the next rate hike at the next Fed meeting. What if they raise it 50 basis points? What is the market going to do then? So now let's take a look at the S&P 500. So get rid of this. Let's take a look at the S&P 500 and try to identify what we see here. So what I labeled out was a few um, lines of support and resistance. So down here at the 4164 level, I put this as a point of resistance because as you can see, not only did we bounce here a few times, if we take a step back, we could see that there was kind of a consolidation period. If you go to the 1 year chart, back in the middle of April to the beginning of June, it was a consolidation period. And not only that, we came back to this level almost at the beginning of July before we began going up on a bullish market. So as you can see, this is kind of a very, very sentimental place for investors. So keep an eye on this 41,000. I have it at 4164, but anywhere in that 4100 to 4,000 range, keep a look up for that. If you come here, the next one I analyzed was 4463, 4465. We kind of closed at that level. Now, if you take a look at the 3 month chart, you can see that we've been on a decline. We've had lower lows and we've had lower highs. So this was a high here, but it was lower. We come here, it kind of bounced up, but it was lower. We come down, we had a lower low. We kind of started going up, but we had a lower high. You can see here, if you start drawing a line from here all the way down, you can see that the lows are getting lower. So that's very bearish. If you tuned into last week's episode when I was with Matt, we talked about the head and shoulders pattern. So we had head and shoulders pattern. If we look at the 1 year chart, you can see it here. Here's one shoulder, here's the other shoulder, and here's the head. Before the head and shoulders pattern, if we go to the 5 year chart, obviously you could see it was a bull run. And even here, you could kind of see the head and shoulders pattern. You have one shoulder here, one shoulder forming here, and then the head. All a head and shoulder pattern means is that you're in a bullish cycle. So if a head and shoulders pattern appears, what happens in a technical form is that it reverses what was already happening. So we were in a bullish cycle. So this head and shoulder pattern kind of identifies a role reversal and a reversal in sentiment. And what can happen from here on is we can see a decline. And we could see a decline all the way down to the, I would call it around the $3,500 level. Some analysts have even gone lower than that. I've seen analysts go to the 3,250 level, which would be about a 25% decline from where we are now, which would put us way past bear market territory, the S&P 500. So that's something to look out for. So are you bullish on the market or bearish on the market? So we had a few up days. Let's look at the 1 week chart. So we look at 5 days. In the last 5 days, look at this chart. Holy smokes. All right. But don't just look at it like this in a vacuum and look at it so small because you can hurt yourself. As you can see, if you put up right there, it lands right at that level of resistance that we identified on longer term chart. So let's go to the 6 month chart. If You can see the bear market forming, right? The NASDAQ already hit a bear market because it went under 20%. There is bull markets in there's bear market. There's could be a bear run, a bull run in either market. So if you're in a bull market, you can have a time where there's going to be bearish sentiment out there. And in a bull market, the bear market seems kind of in a bull run, the bear little time frame seems scary. So people are don't want to really get involved. However, in a bear market, anytime you have a bull run, it's the opposite. It seems really sexy and people start jumping in and they end up hurting themselves because they get that FOMO, that fear of missing out. And that's something that I want you guys to avoid. So really take a look at your time horizon. What do I foresee for the next 6 months? I foresee a period of consolidation. That's my base case. So anywhere in this range here, anywhere in this funnel, let's take a look at a further chart. Anywhere here, anywhere in between these, you could even trade it. If you could do some put calls when it gets to the higher end, and some puts when it gets to the higher end, and some calls when it gets to the lower end. If you want to play it that way, remember those are gambles. If you want to gamble, go ahead and do that. But we need to identify what our time horizon is. And at this moment, if you are going to invest in stocks that are in profitable companies that are not going to be hurt by what's going on. That would be my greatest advice to you. Um, Housing is right now is not time to invest in a house. Again, highest APRs in the last like since 2018 with the highest price on record. They have not so this is literally the worst time to buy. Not only that, the APRs are still going to go up, but around July, the houses will start declining because again, it takes about 6 months for that to take effect, for the houses to reflect what the APR has done. And remember, the Fed is raising the rate more times, so it's going to be more expensive for you to take out money. We saw this back in 2008. Okay. Back then, people were paying about 7%, 8% to, buy a house. And that's pretty expensive when, in comparison, a few weeks ago, you were paying 3%. A few months ago, you were paying 2%. So just keep that in mind. Right now is not the time. What would I do? Right now would be the time to look around and see what's out there. What I foresee happening in the next year or two is a lot of people that were getting these houses for cheap and the banks were just throwing money away and giving to people. A lot of these people are going to go into forfeiture. They're not going to be able to pay these houses. So just keep that in mind. There is a lot of jobs out there, but a lot of people are not going for those jobs. A lot of those jobs are not paying as much as inflation is keeping up. You already see what gas prices are doing. You already see the price of chicken or beef is doing. And I don't foresee it slowing down anytime soon. These things usually accelerate in the summer as people start to spread out. I think that a lot of people right now are dipping into their savings accounts. That's why they're not working yet. A lot of millennials, they were big on savings. So they have that nest egg where they're digging into it right now instead of working. I know personally a lot of people in the FIRE movement who've already blown through everything they planned to save that was going to get them all the way to 59, 60 years old. They've already blown through it. So now they're looking for a way to get back into the workforce and make up for it. So these are trying times. Housing, do not get into it. Cryptocurrency, if you have like some of the big market caps, they've come down a lot. Some of them have come down about 90%, 80%. Get into those, especially if you could get into some on maybe crypt.com or something where you can jump into it and they pay you an APR for holding it. That money's going to increase for you exponentially higher than it would if you just kept it in a savings account. So just think about that. Some on crypto.com are paying about 12%, where your bank starting this summer, you're going to be getting maybe 0.01% for keeping your money in there. So just weigh those odds. Is it more speculative to keep it in crypto.com? Not necessarily, because you can keep it in something like USDT or USDC, something that's tethered to the American dollar. So it is not really as speculative as Bitcoin. However, you do lose some potential upside. So if we do get into another bull market in the crypto in the next 3 months, you just locked up your money for 3 months. So it may not go up as much as you want it to. So it depends. Maybe do a 80-20 or 50-50 in your crypto side of your portfolio, where 50 is staking and getting the extra dividend every 7 days. Or you can just make it where you have 50% in the ones that you think are going to grow exponentially, like 7% in the next few days. So just think about that. As always, I love your questions. I love answering your questions. Thank you for giving me your time. As always, invest in me and press that like button. Invest in yourself and smash the subscribe button. It costs you nothing. Leave me some comments down below. Let us know exactly what you guys are doing in the market. I'm very curious to know. Until next time.